Hello everyone, welcome to the Independent Investor channel. My name is Ryan. On this particular show we talk about stocks, we talk about ETFs, we talk about investing. What does that specifically mean? We talk about a lot of different things that a new investor can listen to for 10-15 minutes maybe and get some ideas about what they can do to secure their financial future. There's so much online now that you can go on and seek out, and if you knew nothing about the market, it would be extremely confusing to try to get any type of information out of what's online right now. Every other video or every other individual online right now is telling you to do what it is that they did for their financial success. And what's appropriate for one person may not be appropriate for the other. And I think, unfortunately, we tend to want to employ a cookie cutter type of approach when we're looking at starting out into finances. And you go and you sit down with a financial planner, and the first thing they want to do is to put you into a program that they've just put the previous few clients in. And part of that comes with listening and tailoring those plans to what the individual investor needs. But what we tend to try to talk about on this show is how an individual investor can empower themselves, okay? And you don't want to certainly go at this blindly. A lot of people say, well, I don't know anything about the market. I would feel more comfortable if I was going with, a brokerage house or sitting down with a financial planner, or they're a friend of the family, whatever it may be. Whatever rationales we go through to justify that type of program can sometimes be made from an uneducated position. When we first start out, we hear, where other people go, or we gravitate toward validating what it is we do with our decision making based on what everybody else does. And that can be one of the most dangerous ways of approaching the market. What you can probably look to do is do your homework, do a lot of research to start. And I've been investing for 25 years, and there's a lot of good information online about what people do nowadays with the availability of information and the number of options that people have to become independent investors. Really, the information is out there, but when you first start, you really don't have a lot of understanding about where it is that you might want to go with your options. So, I've been investing for 25 years now, and if I could summarize a lot of the lessons that I've learned along the ways, I've had a lot of successes, and I've had a lot of failures and missteps. And if I could summarize that time involved in the market as an investor slash trader over those years, the one summary that I would make, the one most important thing that you could possibly do with your money is put your money to work in the correct account. That's the most important thing. So that kind of brings me to goal number one that we look to achieve on this particular program. And if somebody can look at that and say, gosh, that does sound important, I do need to put my money in the right place to make sure that we're achieving goal number one, and that's tax shelter. Without the proper tax shelter, the IRS will come in and assess your capital gains fees, or treat whatever earnings that you may make on the market as earnings and tax you as appropriate for that. And most people, when they're starting out in investing, they really don't have, there's really no need to go and start stock investing if you haven't built up a good diversified baseline, a good diversified portfolio. I mean, you can't necessarily live in a house until you've built the foundation, all right? And so that's why I stress the importance of starting the account and starting it in the correct manner that's going to give you all of the benefits of tax shelter as your money grows and appreciates. So that's point number one. The second point on this particular channel that we like to talk about and stress is how to eliminate or drastically reduce the fees that are assessed on your investment account as the money grows over time. And a lot of people, they think because they have a financial planner, they have a broker, and then they're up to speed, right? They're a participant in the market. sometimes we go through, false rationales in our mind about justifying those positions. And what we'd like to do is kind of expose what those accounts are costing you to own. And I think, there's nothing wrong with asking those questions of yourself. I'm going to be talking about a number of different tools that you can use. As a matter of fact, you can go on and Google cost comparison analysis, and you can put in there, an anticipated fee structure and see kind of how that affects your account as you're looking to grow and preserve wealth over time. And I think most people, if they were able to, take 5 minutes out of their time and ask those questions and run those accounts through those cost comparisons, I think it would be a real eye-opener for a lot of folks. And then you could make more of a decision about whether or not you were willing to continue on those paths and continue to grow with those strangleholds on those accounts or those fees that are attached to those accounts, or look at a different option. And up until recently, here about 5 years ago, I didn't understand that the third option even existed, and that's the self-managed Roth IRA account. And when I came to know the self-directed account, keep in mind I had been investing for quite some time. I had been in and out of stocks, I had been in and out of mutual funds and had some success with it. But all that time I had been involved with, a financial planner of some sorts. And when I ended up getting introduced to the self-managed account, it made perfect sense to me. And not only could I tax shelter and eliminate fees, but I could do things, and I could manage, my own account the way that I saw fit. If I was going to make a mistake in that account, I needed to be the one that was held accountable. But also, if I was going to, make a good investment and get some capital appreciation, that money was realized back to me and me alone. I didn't have to share that money with anybody. I wasn't being hit with hidden fees. I wasn't being hit with transaction fees every time I wanted to maneuver in those accounts. So those are some of the motivations that I had to seek out those accounts for quite some time. And again, just here recently is where I've actually, been educated on the vast number of benefits that exist within the self-managed realm. Some of the misnomers that you see online about people taking their money and putting it to work and making lots of money overnight, or investing in penny stocks, or investing in really high risk assets. Those things are extremely risky for a new investor who's just looking to get started. And one of the things that I look to be very careful on with regard to the content that I put out there is to make sure that if you hear something online, whether it be from me or anybody online, if it's too good to be true, it probably is. Investing done correctly is actually quite boring. All right, you can put your money into the correct account, this account here, and allow that account to grow over time. There's really little to no maintenance that's necessary on that account. If you want to just check in on it once a year and see how well you're doing, certainly you're at liberty to do that, but there's no requirement to do that at all. And a lot of people think that they have to be, looking at stock tapes and reading balance sheets and income statements of companies all day to be a successful investor, and that couldn't be further from the truth. With the introduction of ETF products and things of that nature, which you can just buy an entire index and diversify yourself over an entire portfolio, allows you to, with the right account, meet all three of these goals and allow you to grow and preserve your wealth over time. And anybody that you go sit down with, whether it be a financial planner or if you choose to go with a self-managed account, you're going to grow wealth. No doubt about it. If you're a participant in the market, you're going to have down days, okay? But you're also going to have up days, okay? It's going to do one or the other, all right? And you're going to have to you get used to making money, because now you go from a constant of not making any money or not having any money to invest to having a little money and starting that program, you're gonna have to get used to those accounts growing over time. And you know, capital appreciation is fairly easy to come by if you're in the right investment. Okay. But what can stranglehold that capital appreciation is being in the incorrect account. Okay. You can look to, you know, make your money grow over time, but I think what you need to look at with the cost comparison analysis, that I recommend anybody go on there and ask, you know, what exactly is my broker charging me? What is it costing every year? And more importantly, what is it going to cost in the long term over the course of 20, 30, 40, even 50 years if I choose to stay the course? And I think if you can be honest with yourself and run those cost comparison analyses for yourself, then you can at least make an informed decision about whether or not you want to go ahead and keep the, you know, keep the investment strategy that you have employed, or potentially roll it over and start a new one. So those are the three goals, and this video is just meant as an introduction. We're going to be following on with a whole chronicle of videos. We're going to get more in depth on a lot of these different topics. So please like, share, subscribe at the bottom of this video. Please leave your comments at the bottom of this video. If you would, leave topics, and that way I can read through there. If there's a specific topic that you want me to cover, I will absolutely incorporate those into my chronicle of videos that I'm going to be coming out with here shortly. And just in parting, I feel like I work for you guys. I'm in a position now where I'm just looking to give back some of the information that I've accumulated over the last 25 years of investing. And you know, if you could take and learn from some of those lessons that I've had and employ a good, sound, self-directed strategy for yourself, that the sky is the limit for you. And I'm going to